Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell, Massar and Jess Menton joining our global simulcast. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, Bloomberg Originals, and those folks streaming on YouTube. As we get closer to the closing bell, seeing some buying here. Green across the screen, Massar.
Yeah, look at it. Taking another leg up here in the last few minutes, which is pretty remarkable. And you guys, we've talked about it earlier. You know, you look at the regional banks. I mean, they're actually rallying today. They're up about 2.8% in today's trade, Jess.
And that has to make investors feel good when you are seeing those regional banks, as well as some of the more larger lenders holding up well, especially if you're looking just on a weekly basis as far as stocks holding up, not just last week, but this week as well, with those weekly gains were made.
I will note that this rally is coming on some pretty light volume. You look at the S&P 500, volume is about 3% lower than the 20-day average, but that's normal for a Friday. Maybe that's comforting that we don't have very high volume right now.
Yeah, absolutely. The volume has definitely tapered off a little bit here. It'll be interesting to see how much exposure people want going on into the weekend. And we should point out, we are up against what is effectively the end of the quarter here at the end of next week. So a lot of people are going to have to reposition. They're going to be forced to reposition based on their mandates. So there could be some interesting price action going into next week. And then, of course, after that, we have to start talking about, once again, Katie Greifeld, earnings season. I know you're a big fan.
Yeah, let's go.
Yeah, earnings season. It never ends. And, well, here we go. We get the closing bells. Like here in New York, the clapping begins and the cheering begins here. And, well, they actually have some reason to clap and cheer here on this day. A Dow Jones Industrial Average higher by more than 100 points, or about 0.4% here on the day. That's not going to be good enough. Well, I take that back. That's going to be good enough to give it a weekly gain of about 0.9%. The S&P 500 higher by 22 points, or about 0.6%. It's holding on to a weekly gain right now of about 1%. The Nasdaq Composite up about 3%, 0.3% on the day, and about 1.5% almost on the week here. The Russell 2000, though, is going to squeak out a gain for the day, up about 0.9%, and it's going to end relatively unchanged for the week.
Yeah, speaking of volatility, check out the volatility index, the VIX. I mean, man, at its highs today was up about 2.6 at 25, above 25. At its lows, down more than 2 points at 22 and change, but actually about 21 and change, forgive me. And finishing the day just down about a point here. So I find the complacency in this market amid kind of the news flow this week is startling.
And I mean, it's been interesting. We've been talking about this weekly rally. You can see that on the industry group as well for the day's action. Utilities, though, up at the top, kind of defensive there. Utilities higher by about 3%. Then you have real estate and household products. And there's more green than red. But if you go down to where the red is, you can see semis at the bottom. Remember, they've been on a tear, and they were the leader yesterday. Not so much today, off by 1.5%. And then you have autos down as well, Carol, off by 0.8%.
Yeah, the stock's still up about 23% so far this year. All right, let's get to some individual gainers. This one, number one in the S&P 500, number one in the NASDAQ 100. We're talking about Activision. You know the story. We've been talking about it throughout the day here. It's up about 6% at the close. UK's Competition and Markets Authority updated its provisional findings in Microsoft's acquisition of Activision after some new evidence showed the transaction will not result in a substantial lessening of competition in console gaming in the UK. Basically, God bless you, I think. I don't know. Basically, UK feeling okay about maybe this deal going forward. So Activision certainly a standout here. Number three in the S&P 500. Number two in the NASDAQ 100 is Intuitive Surgical, maker of the Da Vinci surgical systems. You know this name. William Blair initiating coverage with an outperform rating and is bullish about durable growth at the company. So a pop there. And I had to mention Renew Energy Global, up 22% here at the close. It's a $2.1 billion market cap renewable energy company. It's based in India. Bloomberg reported, citing those in the know, that the Canada Pension Plan Investment Board exploring buying the shares of the power producer that it doesn't already own and taking the NASDAQ-listed firm private. So then that explains totally the rally big time in that name, Jess.
And I'll grab the decliners. So have to start off with what we're seeing with the U.S.-listed ADR for Deutsche Bank. It did finish down a little more than 3%. But again, that did pair a lot of the losses, especially pre-market, when it had been down more than than 10%. Obviously, we did see that steep rise in the cost to insure those bondholders against the bank defaulting on its debts, and obviously the concerns about those credit default swaps, but still seeing a big pairing of losses there. And I have to point out JP Morgan, obviously big bank in the U.S., but still down nearly 2%, but not a lot. So just wanted to point that out for perspective as far as how U.S. banks are holding up. And then, of course, I wanted to point out what's happening with Enphase Energy. Now, it's posting its worst decline in about a week. It was amongst, if you're looking at the S&P 500 and the Nasdaq 100, one of the worst decliners in that group. But also, I wanted to point out one that's not on there. So Scholastic, that's down 22%, worst percentage drop since 2003. And that did post a drop, unfortunately, when it came to its revenue in the latest quarter. And it did cut its guidance for the full year. So really seeing that share pressured as well, Romaine.
Let's take a look at yields here, because this has really been driving the story. We talk about coming off what had been 6 straight weeks where we'd seen yields rise. Now we are officially down for a third straight week. We've basically gone from almost 5% down to 3.7 and change on a 2-year yield. That includes about a 6 basis point drop here on the day. The 10-year yield down about 5 basis points. Your 20-year yield making similar moves here on the day. And I would like to point out that most of the indexes that track the debt market, including sovereign debt as well as corporate debt, actually saw pretty substantial gains on a price basis this week. That even includes high yield as well as some of the sovereign debt and the safer stuff out there here. And that really raises the question here is, what crisis? Are we in a crisis? I forget.
Well, I mean, high yield is its own story, but you think about the bid coming into the long end of the Treasury curve. You think about all the rate cuts that are being priced into the front end. What is going to happen? What do bond traders see happening in this economy where that trade would make sense? It doesn't seem too pretty.
You know, we talked to Chris Whelan, who we talked to him so much during the great financial crisis, understands the banking sector. I mean, he basically says the Fed's got to cut rates now. He also says the Fed needs to let inflation run hot at this point. I mean, the concern is, at this point, who else has the Treasury exposure, right? And if you think about it, that's kind of his take at what needs to happen. I'm curious about what happens when Janet Yellen maybe comes out shortly from now and what she says or does maybe when it comes to the bank sector.
Y'all, if we look ahead toward the end of next week, we are going to get the PCE indicator, obviously the Fed's preferred measure to gauge inflation. We talk about CPI so much, and the gap a bit there still between the Fed's terminal rate and CPI. But if you look at where PCE is and where it's projected, not that too far off now. So it does make you wonder, is when it comes to what the Fed's watching, is indeed when we look at PCE, will that be right there where they're looking for it to be at this point?
They still got a long way to go here. And we talk about the impact and the work that has to be done. Is that going to be done through the main measures, the policy levers, if you will, or is it going to be done by kind of what we saw over the last couple of weeks when the market sort of did some of the work for them? I'm not sure they necessarily want that, because, of course, maybe that means it's a little bit more out of their control. But you have a lot of forces now, a lot of deflationary forces, I should say, now working. Not necessarily in tandem, but certainly working out there in some capacity.
To the point that what we're seeing in the banking sector, what behaviors could change, what that means for the tightening of financial conditions, hard to quantify. It just introduces another element of uncertainty in trying to map the Fed's path forward. I mean, Jerome Powell himself said it's really impossible to quantify what the impact is. It's at least one 25 basis point hike, but who knows?
Definitely. And Romaine, I know you like to do those weekly pop quizzes when it comes to the biggest gainers and decliners, but do you know which the biggest gainer was this week?
Wasn't it like in the S&P, you mean? Wasn't it like Match or something like that? So
it was Regeneron Pharmaceuticals. So it was up close to 10%. It was its best week since September.
Wow.
Good for Regeneron.
Yeah, right.
Good for Regeneron.
Some bright spots.
Yeah. Carol, how are you? You're kind of leaning off camera.
Well,
you look good today, by the way.
Thank you. You know, every once in a while we get it right.
That's your compliment. For
I really appreciate it. Thank you. I like the bow tie as well. What's interesting is I hope we're focusing on the right thing, and this is in terms of.
What do you mean the right thing?
That going back to, I'm thinking about this conversation we had with Chris Whelan, that maybe we need to stop worrying about inflation at this point. Maybe the Fed does need to stop raising rates. Maybe it needs to cut rates to maybe ease some of this potential exposure. We still don't know, really, right? All of these bank balance sheets, potentially, on what's supposed to be a safe trade Treasury. I know we have to wrap.
Well, I'm sure the regulators are on top of it.
You really think so?
No.
Yeah, exactly. That's my point. So I'm a little worried that inflation data, maybe that's not what we need to be worried about at this point. All right, I'm getting yelled at. And I look so good. Faith, I got to stay here. Romaine, give me a compliment.
Look at her. She's
I'm not
just feeling herself now. Look at that. Last time I give her a compliment.
It's Friday. All right, guys, have a great weekend.
Jess, when is the wine segment? Is that coming up?
Not today.
Okay.
We had we have a bank crisis, or so we hear. Can't do wine. All right, have a good weekend, guys. That'll do it. Beyond the Bell. We'll catch you same time, same place on Monday.